Hello, everyone. This panel is mainly about the trading cryptocurrency, and I'm pretty sure that anyone who ever dreamed of being a billionaire with Bitcoin will find this session very interesting. Okay, so for the next 40 minutes, we are going to talk about the trading market trends, dynamics, and forecasts, and more. I'm the moderator of this session today. I'm Minyoung from Coinone, working at Coinone as a business developer. And we see our fabulous panelists here from a variety of players in trading markets. So let's do a 2-minute introduction about yourself and your business. So please, let's start with Joon over there.
Hi, my name is Joon, Senior Executive Advisor at Korbit. Korbit started exchange operation from 2013, the first crypto exchange in Korea. But I'm here in Palo Alto to search for the very great, valuable project that can be listed onto Korbit exchanges. So please contact me if you have a great project.
Hi, Ricky Lee, co-founder of Altonomy. We're a crypto trading and asset management firm. And a lot of familiar faces downstairs, even though I can't really see them. The light is too bright, but hello everyone, and we've been working with so many of the ICO issuers and the exchanges for market making, liquidity providing, and also some of the crypto asset management.
Hi, people. This is Meng, and can you hear me? Okay. This is Meng from Trade Terminal. I'm a founder and CEO of Trade Terminal, one of the trading and asset management firm in Bay Area.
Hey everyone, my name is Dmitry Kalichkin. I'm a general partner and chief research officer at Cryptolab Capital. Cryptolab Capital is a liquid-only, secondary markets-only crypto hedge fund. We're a team of Stanford and Oxford-educated mathematicians and cryptographers, and we see a lot of opportunities in secondary markets as opposed to primary markets that seem to be oversaturated with money, too much money pursuing too few good projects, and we see a lot of opportunities in public markets, which are not fully exploited yet.
Okay. Lastly, I'd like to tell a bit more about the Coinone. Coinone is a fiat-to-cryptocurrency exchange based in Korea, of course, South Korea. And we've been operating from 2014, so it's kind of the first generation of the exchange industry. So now we're focusing on the global expansion like other exchanges. So I'm not going to tell any details, but you will find us around within 2 months, hopefully. Okay. Okay, so I think that's enough for the introduction. So just to be clear, me and Joon, the two of us are from the exchange side, and serve you guys, Ricky, Dmitry, and Yao are from the trader side. Okay, I guess we got the balanced view for this session. Let's start with a just general question. What is the current trading market trend on your own business view? Let's start with Dmitry, please.
So I think market overall is still dominated by retail traders. We see institutions coming in, institutions like ourselves, crypto only, as well as big institutions are slowly getting involved. And I think they are more involved than many people think. But overall, the market behavior is still dictated by retail investors, which determines the way markets perform, which is still very different from traditional markets. So for the time being, yeah, it's still not a mature market, not even close, as compared to traditional assets like commodities, equities, debt, and so on.
I totally agree with Dmitry, and this market is indeed determined by the retail investors, and we see slowly, and the institutions are coming in, like BlackRock, like Fidelity. They're going to use some vehicle to come in, but as far as the SEC and regulatory side, they're waiting for approval or more regulatory side clearance, and we hopefully would see that in later this year or early next year, but sooner or later it's going to drop, and when that comes, and this market would be truly much more liquid. Allow my English, yeah.
Yeah, I mean, I think same concept to you guys, what you guys concluded, but from a little bit different perspective, because we trade mainly, crypto to fiat in the OTC market, So the way we see it is actually, how much money is actually from outside the current crypto community is flowing in and out into this crypto asset class, right? If it is classified later as a asset class, of course. So when we see the volume that has keep dropping since actually January, February timeframe, it becomes, day by day a little bit more fragile because of the, lack of support from external funding, right? Especially in the past few days, we see the dropping in volume overall, either buy or sell between fiat and crypto. So that's from our side is more like, same conclusion, still very fragile, but from the OTC side of perspective, yeah.
Right. So still, I think that most of the traders are for speculative investment and trading side, not based upon the utility functions, right? So the small capital-based arbitrage players and heavy traders hugely contributed to the growth of the trading volumes by today, right? It still continues. And another thing is crypto market hugely increased, right? But people just buy Bitcoin, Ethereums with fiat. To buy this, Bitcoins with fiat, you need bank access, right? So by this, fiat inflows, you buy Bitcoins, and with these Bitcoins, you buy another alternative coins, right? So by the backing of the fiat, inflows, crypto market grew quite much, and the market will be, I think that will be sluggish for a while. Mainly two reasons. The first is the banking support for fiat inflows will be kind of stagnated, right? That is one factor. The second is no one is quite confident about the current level of cryptos are adequate or not. So everybody is just watching each other's, whether the price moves up or down. So not quite of a bold position taking in the market. So it will continue for a while before some dynamic changes, I think, right?
Okay, so I was supposed to stick to my questions, but you guys brought some issues. I would go for issues by issues. Is it okay for you guys?
Sure.
Okay, so
Sure,
I would start with the retail markets you mentioned. So lots of institutional, professional investors are coming into this market. So do you think there is still a room to grow for the retail markets?
For retail markets?
Yes.
Yeah, I think so. The total number of Bitcoin wallets and Bitcoin owners is estimated at like tens of millions, which is maybe 1%, maybe less than 1% of global population. And if you compare it with other asset classes, even equities, more than half of US population owns equities, which is in itself like over 100 million users, and then there is China, and then there is like the rest of the world. So I think we are still very early, both from the institutional and from retail perspective. But I think up to now, the market behavior has been fully determined by retail.
Yes, true.
Over time, even as the retail penetration increases with the inflow of institutional money, the behavior will be determined more and more by institutions, because one institution coming in equals to whatever, thousands of new retail investors.
And do you think these new market dynamics are going to change the behavior of retail customers?
It's gonna make things harder. It's gonna become harder to make money,
sure.
because the markets will become more efficient
Yeah.
with more smart people like this gentleman coming in. I think people would still be interested in coming in and playing and speculating, because for the vast majority of retail investors, it's speculation and not kind of long fundamental investment.
Okay.
So we'll see more efficient markets. We'll see less momentum probably, but yeah, these are some of the thoughts.
I see. You want to add something there, Ricky?
As for like Dmitry just said, right, it's primarily a retail-driven market right now, and as the market matures, it definitely it's going to be much harder for retail customers to actually start making money, and also because I used to trade commodities market for a while, and I see that as the end, sort of like not end, but I see that as the way that the market going to evolve into once institutions gets in, right? Once institutions gets in, have more sophisticated trading strategies, sophisticated market engine, all that coming in, and then will become extremely hard, or not impossible, of course, but extremely hard for people to do short-term speculations, right? But right now, that's still very, very profitable strategies even for retail guys. But that window is diminishing, especially if the regulation comes down as institutions starts going in, right?
True. Yeah, you want to add something?
I think for us, it's the golden age. This is 1989,
Yeah, exactly.
and we're doing quant strategy. We have a lot of data, and it works. The model really works, not working just in growing market, but sometimes in this very fluctuate market now. But for longer term, we have to, say, 3 years, and they're going to connect 50 APIs, 50 exchange APIs. They're going to have a large team doing this, and then we're so for us, the crypto original people, then at that time we might have already evolved into higher level of this business, because I myself I was mining since 2011, and then I started selling Bitcoin miners and building Bitcoin miners in 13, and started arbitrage in 14. Then we have like 30 people in a team, 15 PhDs now, but we're going to grow, and one day we're going we avoid compete, so to that way we you don't want big banks taking they're doing your strategy, but only you're doing today.
How about the exchange side, Joon? These new institutional clients are going to impact on the exchange?
Yes, definitely it will have a huge impact in the future, but somebody say it will be very near future, but for exchange side, I think that it will take some time, because those large firms, they have some contract with their customers, and also there should be some accounting basis, tax basis, regulatory basis should be ready, so that those large high brand names such as Goldman Sachs hedge fund can come into this market, right? With their proprietary fund, they can do their trading, but to manage the customer assets, there are so many things that should be prepared by the infrastructure. So I think it will take years, right? So I see many, high brand, high street, institutional investors are looking into these areas, mainly for arbitrage strategy. But for asset management side, that's the fundamental, inflow of the asset management funds into this area. It will take some time before developing those infrastructures. But in the future, I see very positively. Yeah, they will come and develop the crypto trading volumes.
I see. Joon mentioned it will take some few years to exchanges that adjusting this new market dynamics, but I guess it's faster than that, because they are already evolving to fit this new market situation, and new exchanges are daily coming out. So yeah, we'll see anyway. And this regulatory issue is frequently popped up in this discussion. So what is your personal opinion about these regulatory issues? It can be specific, but in generally speaking. Yeah, would you go first?
Well, I'm not an expert on but I see no harm in the recent, like, for us, because as far as they determined it by they reach agreement that it's a security or not, it's still tradable. And once the more clear, the better for us to conduct business. There's always a way to find a business to trade it. And the more clear is, say, Fidelity wants to invest some part of their investment to us, and what license do I have to acquire for security or not security, there's no say now. But once it's clear, there is. So more money would flow in as far as there's regulations.
What do you think about this, Dmitry?
In general, I think it's good. The next wave of appreciation, as is commonly thought, will come from new money flowing in from institutions. And for big institutions to come in, they need clear rules. Is it a security? Is it a commodity? Is it a good? Then in order for these institutions to come in, they have to have custody services. They have to have clearing houses, because right now, crypto exchange is an exchange, a clearing house, and a custody provider, and no real institutional investor would ever work this way, because it's one huge single point of failure, especially with the irreversibility of blockchain transactions. So in order for all this infrastructure to appear, and this infrastructure is required for the inflow of next chunk of institutional money, for this asset class to become fully institutionally recognized asset class and not some weird frontier novel thing that nobody really understands in the traditional financial market, this regulation is required. Absence of regulation, although, allows guys like us to exist, and it gives us a bit of an edge, as you said, because once everything is clean and clear, Two Sigma will jump in, Renaissance Technologies will jump in, and the other high-frequency algorithmic trading guys, and this will be much, much harder to compete. So it's good. I want it to happen. I don't want it to happen too fast, because there is a bit of an alpha, if you will, in this being a kind of frontier asset class that some people don't want to touch, because we're the people that do, and this gives us a bit of an edge. So I think it's inevitable. It will take more time, I think, than some people hope, but I don't think it's bad for us, for us as like secondary market traders.
Well, I think one thing is that I think we do have some edge as a frontier, because we developed over the years. We have developed skills, and we know how to connect to the exchange connectors, or we know how the exchange works. We know this market is better. And say Renaissance Technology, they jump in. They're not going to find let's say some exchanges, their API breaks. They send you HTML in a supposedly to send you like a JSON formatted socket. So this thing, I think, is the edge, and they're not. So the regulation comes in. They start to prepare it. Then they spend 2 or 3 years. Then we have escaped. We go to higher dimension of business. Ourselves may be some like custodian banks or some clearing houses. As you said, this is for the exchange. This is conflict of interest. If you do 3 business as one, this is a conflict of interest, and it's no good in traditional market.
Yes, it's really tricky, I guess. Okay, so we are running out of our. Oh,
Might I add to it? So
sorry,
yeah,
sure.
I mean, I think I actually do not actually fully agree with you guys just mentioned, because I truly understand that like the regulation gives guys like us like sort of an edge over the traditional players, over the current like retail customers. But we are actually looking more as of the way to influence regulators, because right now they have no idea. CFTC, SEC, and FinCEN, right, the 3 most powerful regulators in the space, right? FinCEN obviously looking at terrorist funding, money laundering, on that, right? SEC is trying to figure out, whether or not each token is a security or not, right? And the CFTC is already looking at CME, Bitcoin futures price index manipulation, right? So all that is basically as a show of sign that they're trying to do something. But from our side, because when we were actually at the CME group, I was dealing with a lot with the CFTC guys. So we talked with them, and they actually actively been looking for sort of like opinions from the trading community, right? So we have a group of traders like us in the Circle, DRW, and Two Sigma, those guys. In New York, we actually form a group. Like, how are we going to educate them, right? If the CFTC comes down and say, okay, we're not comfortable with the price index that the CME is using right now to settle their Bitcoin futures, then what is the good way of settling the price? Or how will we be able to make it better to have a physically delivered, Bitcoin futures traded on XAME, because that would be huge for everybody here, right? That would be huge inflow of money. So for us, it's like we have a group of sort of what we call a self-regulatory organization, SROs, that are formed by the trading community, and we're basically starting out by giving term definitions to the regulators, basically, what is POW, what is POS, what is Bitcoin, very, very basic levels, baby steps, right? To tell them that's how you should be looking at it. And then, gradually take step-by-step approach to educate them, okay, it's a Bitcoin, right? There's no storage, it's not like a crude oil, right? And then that's how you should measure the supply and the circulation supply, and then that's how you should set a position limits, right? Baby steps there, and then we sort of to be more trying to the influencing side to let them know. And of course, if we get on that side, then anything that happens on the regulation side, we'll be the first one to know, right? First one to respond, and then we can keep the edge that currently we're having, right? So that's my perspective.
As Ricky mentioned,
Yeah.
educating the government officials are very important. But government regulation is not a single entity. There are so many diverse entities that we have to approach and educate. So ICO-related one, capital market, Security Act, banking, anti-money laundering side, KYC, customer information protection, all these departments are different. And the development and understanding level of these government officials are very, very different, right? So they mentioned about SEC and ICO side, right? The other side is banking access is very important factors, right? As I mentioned, there should be some fiat inflows into the market so that people buy Bitcoins with fiat. And then with this Bitcoin and USDT, you buy some alternative coins. So usually alternative coins price generally very highly linked with the price movement of Bitcoin. So the Bitcoin price movement should go up only in case fiat inflow should be supported. In that case, we have to be very keen on about building up some relationship with the government officials, but also with the private commercial banks.
Yeah, I somehow agree with Ricky to some degree, because still the cryptocurrency is relying on some gray area in most of the countries, and some of the governments are trying to apply the traditional capital market regulation to crypto world. So the flow of money is not free enough to make up the price gap, and it's just not efficient anymore. So I know it's wrong way, but we have kind of duty to educate them. So make the better word for cryptocurrency, I guess.
Yeah. And believe me, they're trying to, right? They're trying to reach out to the trading community. It's just like, it's a different community than the traditional equity or commodity trading guys, right? It's different, and they actually have nowhere to find them. And that's sort of like, hey, a lot of guys are putting the effort to form this community, right? To sort of like, okay, here's us, and we are trading it. Come ask us questions, right? And don't just go out and saying, Ether is a security, right? Because then the market reacts very badly, right? So that's sort of like the approach we're sort of taking. Yeah.
Okay. I guess we spent too much time on the regulatory issues, so let's just leave it there, and let's focus on the trading strategies. I guess this is the exact question everyone here wants to ask you guys. So, what is your main trading strategies? How do you make money? Okay, I guess it's kind of the secret of your business. Okay, but just give us some hints. So, yeah, Dmitry, please.
Okay, so we are a mixed strategy fund. So we run a number of strategies. We are liquid only, so we don't do any ICOs. We only focus on the coins that are publicly traded. And there we have one kind of umbrella of strategies, which is fundamentals-driven bets on selected currencies. Those are long positions in the coins that we believe in the long run. And we hold them, and we actively manage this portfolio. And here, what is very important, I think, is valuations. People talk a lot about crypto being an asset, but most of the people doing fundamental crypto investing, they still mostly focus on qualitative metrics. Quality of the team, quality of the technology, and so on and so forth. And the question that we're trying to answer, okay, if the team is good and the tech is good, is the asset reasonably priced compared to how much it's used and compared to the comparable businesses and networks? So that's the fundamental strategy. And there we dig very deep into the technology and the team, but also doing a lot of research on how do you actually price these things. Because it's not a security, there is no cash flow, there is no discounted cash flow model. But there are actually some academic work being done on crypto asset valuation models. And this is something that we're spending quite a lot of time on the fundamental side. And then on the algorithmic side, which is the second part of what we do, it's everything starting from traditional kind of price volume based strategies, momentum, mean reversion, and going into more sophisticated things such as machine learning based price predictions, as well as not just looking at market data, but also looking at crypto asset specific data, which is blockchain transactions, flows in and out of exchanges, daily active addresses, and the like. Sorry, it was, I know I took too much time, but
Oh, no, this is fine. It's just, 'cause I wanted to ask that. It sounds like you are dealing cryptocurrency as like kind of the securities kind of thing. So do you see it shares a lot of nature of traditional asset class?
not securities, probably closest is commodities, because there are no cash flows, so there is no kind of present value. So the price is determined purely by supply and demand as opposed to equities having cash flows. So I think the closest is commodities. But it doesn't fall into any of the existing buckets very well, which is something that we spoke about today, that even
it's
regulators
totally
don't
new.
understand what it is.
I see. So it's like kind of a new asset class.
It's a new asset class, yes. The first digitally native asset class, if
I
you
see.
will.
Okay. So let's see to the trading strategy. Okay, again. So yeah.
So for us, we are doing this differently. We don't believe there's, well, at least for now, the fundamentals doesn't drive the price. There's little or very less influence.
Okay.
We're purely using data. We grab like let's say hundreds of gigs of data per day, not including blockchain data. It's stored there, and we don't want to spend money for blockchain data grabbing. We just analyze it as it comes. Then we store this data. We have terabytes, hundreds of terabytes of data since 14. We use models that are how to treat those data. A lot of PhDs working together to solve models, back testing it, then deploy it to exchanges. And I think this model makes money for now. And for the fundamental side, I think this market is so, well, for traditional market, you see, you compare the size of secondary market and primary market. Primary market might be like a secondary market is 100 times as primary market, maybe 1,000 times. But in this market, it's so different. Okay. And so you look at those fundamentals, it's hard to tell. And also, we use blockchain data. We say inflows of market, people wire money to the exchange, wire money out. Then what do? You add a parameter to your models that might help.
See.
Yeah, I absolutely agree with what Yao just mentioned, right? The secondary market here is not even, it's not even at the infant stage. Because, with a primary market like this, the secondary market should be a lot bigger, pending regulation, of course. But for us, right, we're not actually trading actively so much in terms of proprietary trading. We act mainly as see ourselves as an infrastructure level of service providers to a lot of the exchanges, right, and crypto hedge funds. So we partnered up with a lot of different exchanges as an affiliated market maker to actually provide liquidity, right, in the market, right, to let people buy and sell at a minimum spread and actually less cost, right. So that will provide a value in terms of a trading strategy. Of course, we will use statistical market making to cover those costs, but we're more towards serving the crypto community and for the crypto hedge funds, for the IC issuers, and for the exchanges mostly, to encourage people to trade more. And as sort of extension to that, we do OTC trading, as I mentioned, to between crypto to fiat, to help people get in and out of position. And also we sort of have our own private index funds, that actually help people to diversify either into a basket of tokens, right? in the U.S. So that's our goal. And in terms of trading strategy, and it's mixed, right? There's really no trading strategies that in all of them, but it's all about how do you optimize each of the trading services to perfection, right? So.
So how about June, on the exchange's point of view, is there any outstanding trading movement or on your exchange or between exchanges? The outstanding trading movement.
Trading.
Yeah.
All right. So by today, retail investors and arbitrage players with a small cap, and many of the hedge funds are creating small funds specific to the trading of cryptos, and also market makers. So there are a lot of diverse customer segment in the exchanges. And I see more and more diversified trading customers and competitors and players are coming into this market. So as you mentioned, high street, high brand, the asset managers and firms will come in the future to add their capital inflows to this market. And also DR-based, utility, demand-based retail customers will come in the future, maybe 3 years or 5 years later, okay, right? To serve those customers will be kind of opportunity. And also I see very diversified brokers are coming into this market, right? To the OTC market and exchange market. And they are leveraging traditional stock market, derivative market, and retail FX market technologies, trading tactics, such as order aggregations and also smart order routing to provide the best price for their customers. These are quite of a very threatening factors, right? They are our customers also, and they can be our competitors. So the competitive side is changing and customer demands are changing, so we have to adapt to those changes.
Okay. I wish we had more time to talk, but it looks like it's the end of our session. So it was really great discussion with you guys. So thank you for all the panelists, and thank you for listening. Okay.
Thank you, Mia.